Okay, so let's move right along to our next topic, which is something that we're putting up here a bit as a repetition, but also as a general observation of people we talk to about Bitcoin treasury companies. It seems that there's still a bit of misconceptions about the differences between Bitcoin ETF and a Bitcoin treasury company. This is supposed to help you understand and see the differences here with this table. So what we've put up here is for a 10-year horizon, if you just want to invest in Bitcoin, this is the easiest part, right? And by the way, this is something that we haven't talked about a lot, but is recommended before hyping into Bitcoin treasury companies to first understand Bitcoin, to know what you hold, and maybe also invest in Bitcoin before diversifying into Bitcoin treasury companies, as this is really the savings vehicle, in our opinion. But here, for those purposes, if you invest into Bitcoin, you buy one Bitcoin today, it will remain one Bitcoin over the next 10 years. You don't have an MNAV, you don't have any yield on it. It's just Bitcoin, spot Bitcoin. Then, if you compare that to a Bitcoin ETF, where you have, for example, on the BlackRock Bitcoin ETF, you have a fee of 0.25% a year. So if you invest into one Bitcoin today, in 10 years, you will have 0.97 Bitcoin, because every year you lose a bit. It's not thermodynamically sound, as a sailor would say. You lose energy by investing in those instruments, because those companies offering the ETFs, they take a little cut of it every year. And now you compare that to a Bitcoin treasury company. Here, as an example, a Bitcoin treasury company with an MNAV of 1 and a Bitcoin yield of 10%. There, the target clearly is, if you invest one Bitcoin today, is that every year you get more Bitcoin out of it. That's the idea of additional Bitcoin per share, of Bitcoin yield. And this is the whole idea behind those companies, is you want to increase the Bitcoin that you hold by investing in them. And the whole trick is to find a company that makes this possible. This is now just in theory, but looking at three concrete examples with Semler, MSTR, and Metaplanet here on the table, you can see with their current MNAVs and their current BTC yields what this actually means, right? So looking at, for example, at Semler, if you sell one Bitcoin to buy Semler today, you would only end up with 0.74 Bitcoin, because their MNAV is above 1. So you're kind of losing that share. But if they can maintain their BTC yield that they're currently showing of around 20% per year, in year 3, you would be back at your 1 Bitcoin. And in 10 years, you would have 3.8 Bitcoin. And same story for MSTR, quite similar. And then on Metaplanet, it's quite interesting because the MNAV is very high, over 5. So if you sell one Bitcoin to buy Metaplanet today, you end up with only 0.2 Bitcoin. But they have a BTC yield of 300% that they're currently showing. So with this, in year 3, you would end up with 3 Bitcoin anyway, if their growth continues like that. Now, how long can they keep this up? What are the risks behind it? That you need to analyze and understand as well, because as you can see now, year 10, 49,000 Bitcoin probably doesn't make sense, and they won't be able to hold up those super high BTC yields as they grow bigger and stronger. Yeah, this is the main message behind this, is to show you the difference between a Bitcoin ETF and a Bitcoin treasury company. Now, this doesn't say anything about risks, right? Because obviously with higher returns, you also take higher risks, and those companies can go belly up, they can get liquidated, and you have nothing at the end, right? So this doesn't show anything about that.
Yeah, that's a really good point. I think the risk aspect is something that people, when trying to invest in those Bitcoin treasury companies, or looking at the different exposures of Bitcoin, need to think about, right? Have a proper mental framework of the risks. So which risks are you exchanging? Which risks are more present with which different type of exposure that you have, right? So this is something that we haven't addressed, and that's something that we will show in the next slide, right? But let's say you take spot Bitcoin, then you don't have all these counterparty risks that you would have with Samler, MSTR, or Metaplanet, right? And obviously there's not only the risk that you take on the time frame, but there's also different risks that are appearing or throughout the time span of an investment that you would take as well. So it's very important to have a look at all of this and make sure that you invest in what's adequate to your risk profile and what you're looking for, right? And that's why it's also important for you to do the research on these specific companies or different types of investment vehicles that you're taking Bitcoin exposure.
Yes, absolutely agree. And to reiterate, what you're doing when you're buying a Bitcoin treasury company is you say you're willing to pay them a premium, because most of the time they trade at an MNAV above 1, and lose, in that sense, part of the Bitcoin that you could have by buying Bitcoin directly. But those companies can do things that you, as a private individual, cannot do. They have operative cash flows in some examples. In other examples, they can just borrow at super attractive rates, like those convertible bonds that they issue at 0%. You can't do that as a private individual. You can't issue shares at the market. You can't issue other financial instruments like preferred shares. You can't acquire companies that maybe are trading below 1 MNAV and are attractive in that way, right? So those publicly traded companies just have the ability to create financial engineering and instruments that you can't, and that's why you invest in them, because you think that they will be able to get you an attractive Bitcoin yield.
Yeah, and that's why Saylor mentions in some of his talks how a company is the most powerful engine that was created by mankind, right? Because suddenly you have the power of a few people or a bunch of people that gather together to create those engines and be able to borrow at low rates and so on, right?
How many chairs are you sitting on right now?